Hello, I'm Debbie Bell, hosting for FinextraTV here at Sibos 2022 in Amsterdam. And I'm talking to Stella Clark of Fenergo. We're chatting about Know Your Customer, KYC, and also a recent report. Stella, hello.
Good morning, Debbie.
And I mentioned that report. It was released by Fenergo, KYC in 2022, Final Frontier for Digital Transformation in Banking. So can you tell me what was the motivation behind the research of the report?
Of course, Debbie. Since the enactment of the Banking Secrecy Act of 1970, laws and regulation to fight financial crime have become more complex. However, in that time, the complexity, the nature, the volume of data that need to be collected and analyzed has grown substantially, mainly driven by factors like the increased complexity and opacity of corporate structure and ownership, the globalisation of markets, and the sophistication of criminals. As a result, KYC compliance has never been more challenging. So Fenergo in 2022 launched a survey across over 1,000 participants from over 100 corporate banks globally to better understand the current state of KYC compliance.
What were the results?
KYC compliance is still a very costly, very lengthy process that requires a high level of manual intervention. For example, over 65% of the respondents spend $35 million a year in KYC reviews. 50% of them employ more than 1,500 to 2,500 full-time employees to perform KYC review every year.
What are the challenges in this space for financial institutions?
90% of the respondents are telling us that this impedes their ability to make timely and informed risk decisions. More worryingly, because of the nature and complexity of these processes, there is huge backlogs that are building up in the background, and this is a main area of concern. So for them, really, it's about inability to manage efficiently their clients, and this is leading to high cost, a negative customer experience, and at the end of the day, this is really challenging the level and the quality of the banking relationship they have with these customers.
How can financial institutions start addressing these challenges?
So if you look at it, there is different things that can be done when we talk about automation. Let me give you a couple of examples. First one, I'd like to talk about BNP Paribas and what they have done with One KYC, which is basically setting up a global utility that allows to perform KYC review for every entity within the BNP Paribas group, across countries and across business lines. This is a high level of achievement in terms of standardization and automation. The second step that you can look at is really reducing the burden of KYC periodic reviews that represent 80% of the total operational burden for these corporate banks. So what it is about shifting from periodic review, which are done at regular interview of 1 year, 3 years or 5 years, to a far more proactive and interactive approach where you react to changes to internal and external data. Let me give you a couple of examples. Ongoing screening, where there is a new PEP or a new sanction that is enabled and you can react to that and identify quickly which customer are exposed, versus a change in a company data that has non-material impact and you want to be able to process that automatically with little or no human intervention.
Stella, thank you for chatting to us not only about the research but the challenges and how we can enhance our approach to those challenges. Thank you very much.
Thank you, Debbie.